Welcome to Perusing's Appraisers on Purpose podcast. Our podcast showcases inspiring appraisers and professionals from the industry who are leaders in their field. How did they get to where they are? What have they learned along the way? What can we learn from them? Your host is real estate investor, entrepreneur, and appraiser, Michael Hobbs.
Well, welcome to another episode of Perusing's Appraisers on Purpose, the only podcast that people continually say they absolutely love. And thank you for that feedback. But don't thank me. You can thank our guests this episode. We are delighted to have Rob Moorman with us. Rob, thanks for joining us.
Hey, thanks for having me.
I appreciate it, buddy. You've got a fantastic story. You've been involved in so much in the industry. People are absolutely going to love the episode. So if you haven't done so already, even though you haven't even heard it, go ahead and hit the like button and subscribe on whatever method that you get this wonderful audio experience. And I have no doubt that you're going to take some learnings away from this. So feel free to pop some comments in the chat along the way. So Rob, everybody wants to know, were you born this way? Or how did you come to the appraisal and valuation profession?
Interesting that you would know I wasn't born this way. It's interesting, the thing that I'm experiencing now is a number of legacies in the profession, way more than there were when I started, which is a good thing, I got into it. I was a professional musician, and after graduating, I graduated from college in 73.
Oh, okay.
Yeah, forever ago. It's hard to, time flies, man. I look back and go, 51 years, for crying out loud. How did that happen? Yeah, I know. And so I was moved to Austin, had a band, and we played in Austin and all over the United States.
That's
traveled a lot. Most years we do about 300 nights on the road, which was pretty brutal,
I'm sorry for interjecting, but I just want to say that I don't think most people realize you were one of the early members of the Beatles. I mean, thanks for joining us, buddy. I mean, this is amazing.
Yeah, right.
I think that you finally settled in with the Rolling Stones and all, but this is amazing.
No, it was. It wasn't what we never quite got to where the Beatles got to. Our fame was limited without a doubt, and and it was fun for the most part. But only problem that I have is when I think back on those days is that I didn't enjoy it enough. I didn't.
Oh, got it.
Be in the moment and go, oh, this is so cool. I'm playing music for a living and rubbing shoulders with all these, with Willie Nelson and Merle Haggard, and I never stopped and went, oh, this is so cool.
Oh yeah.
But it was cool, and so because I was driven to be a star, and it never happened. Mm-hmm. And what happened? Interestingly enough, I was living in Rio New Mexico, and had an experience. Well, 3 or 4 experiences, which is kind of a long story, but came to be born again. And
love it.
And that was, people say, oh, well, people of faith can go to bars, and I don't, yes, they can, without a doubt.
Absolutely. Quite often.
Yes. There's nothing that prohibits someone of faith from going to a bar. The thing was, if you weren't a star and you were trying to make a living playing music, you lived in those bars. I mean, you were there all the time. And I just didn't want to do that anymore. I wanted a more settled lifestyle. And so I came back to Brenham, where I live, in Brenham, Texas, where they make Bluebell ice cream, by the way. And
oh my God, I'm so sorry that we didn't send out some Bluebell ice cream to everybody listening, because that is indeed a treat. Like, if you've never had Bluebell ice cream, it's just deliciousness right there on your tongue.
It definitely is. So I moved back, and a friend of mine had inherited controlling interest in a bank. Oh. So I figured, okay, if he's got controlling interest, then what he says goes. So I went up to him and told him, I'm off the road. I'm thinking about going to law school, but I need a job between now and then. Anything you could offer.
Yeah.
And so he did. I got a job there, and started, but just doing teller work and bookkeeping and financial analysis and all that kind of stuff. And then one day he came and said, "Look, I'm starting a mortgage department."
Wow.
And I'm hiring a man named Gordon Parker, who was running savings and loans.
Mm-hmm.
And he was going to hire him to start this mortgage department. And he wanted me to be his assistant because I had decided not to go to law school by that time.
Okay.
And so we got it started. And Michael, this was back when prime rate was 15%.
Oh, yeehaw. I mean, nothing's more exciting than prime rate at 15%.
15%.
Come on.
And so we were going to do this new thing called adjustable rate mortgages.
Ooh.
Yeah, at two plus prime plus two.
Prime, love the prime plus two. Gotta love it.
So I'm looking at 17% interest rates thinking, oh, well, this will be an easy job because no one is going to, that's nuts.
Actually.
But lo and behold, this guy comes in to make application to buy a house, and I sat and watched Gordon take the application because I'd never, I was brand new at it, and so he takes the application, and then he sets up an appointment to go look at the property, and then he tells me, you need to go to the store and you need to buy a 100-foot tape that measures in tenths, a Polaroid camera, a clipboard, and graph paper. Okay, all right. So I did, and I come back, and he says, "Well, let's go." So we go and measure the house, and I'm making notes, carrying the dummy into the tape, and he's drawing the sketch, but I'm making notes what he tells me to do, and we get it all done, and go back to the office to calculate the size.
Mm-hmm.
Calculated the size, then went to brokers because there's no MLS, no internet.
Yep.
Right? Go to the brokers to get sales that he called them comparable sales. I'm like, okay, that makes sense. It's a very descriptive term, comparable sales.
That is. That's a good one.
Yeah, and so we got those, and then we took those and went to the appraisal district to get the sizes of all those comparable sales.
Oh, all right.
Yeah, and then we drive around and we take pictures of all of them. It's a small town, and it was probably 9 or 10, total. Mm-hmm. And looked at them, and I took notes. He was telling me what to look for and everything, and I took notes. We go back to the office. He comes up with this green and white piece of paper, and he sits down at my desk beside me and shows me how to fill out the whole thing.
Oh, wow.
So I'm filling it out in pencil, and we finish it all, and I'm looking at that, and I went, this is pretty cool. I said, what is this? He said, well, it's an appraisal.
No way.
And I said, oh, okay. He said, this is what they call the Green Hornet, and that was the precursor to the 1004.
Yep.
And so, I took it. Nobody that's very young will appreciate this, but I took it to the typist.
Yes.
And gave it to her because it had to be typed.
Of course.
And, the blanks weren't any bigger than they are today. And so she had to fit those in with this IBM Selectric typewriter.
Of course. And IBM Selectric typewriter.
Yes. And she was like, how many of these are there going to be? I said, I don't know. I said, I didn't think we'd ever be doing any with interest rates as high as they are.
Yeah.
She said, well, okay. So that was the appraisal, and so a couple days later, another guy comes in and makes an application. Word gets out that we're, have this mortgage department. So this other guy comes in. I took the application. I made the appointment. I gather up all the stuff, and I look at Gordon, and I said, let's go do the appraisal, Gordon. And he says, well, what do you mean we? You're the appraiser.
You're the appraiser. Congratulations.
I'm the appraiser. Yeah. So I go do about half a dozen of houses and unimproved land because I'm the appraiser, right? And then one of the members of the board of directors owned the Chevrolet dealership, and he wanted it appraised.
Okay.
Yes. So I can still remember stretching that tape across the body shop, and halfway across I stop and I go, I have no idea what I'm doing. There has to be something that gives me more guidance than what Gordon has given me, So I went back, and there was this thing that banks had called the American Institute of Banking. And their course, they had live course, in-person classes, and they had correspondence. Correspondence, of course, is just, you do the lesson and you mail it in, and they mail it back.
Oh, yeah.
And so I took the appraisal course that the AIB offered, and they used the appraisal of real estate. They used what was in the AIREA, American Institute of Real Estate. They used their textbook for that course. And it was a good course. I mean, it covered a lot, but I was looking at that going, if I'm going to do this, then I probably need to find out how so I called the number, the Chicago number there was in the book to find out, and there was a local chapter in Houston. So I got hooked up with them to find out, and by taking that course, I confirmed my opinion of my knowledge.
Yes.
That I didn't know anything when I was appraising that automobile dealership. I knew nothing. I knew how to measure it, and that was it, So I worked at that bank, and the problem with banking back then, and maybe still today, is that, you make your deal going in, and that's it. And if you want to raise, you got to move. So I did. I worked at two banks, and then I was working at a savings and loan and I'd been an appraiser for the banks that I worked at, but at the savings and loan, I wasn't doing appraisal. I was just consumer loan officer. Yeah. But that's when the savings and loan crisis occurred, which is, history, but it's what brought in FIREA. It's what, a lot of what we do as appraisers and how we're governed is a direct result from the savings and loan crisis.
Yes.
So that hit, and I went, this is awful. This is just ridiculous. So I went and got a master's degree at Texas A&M.
Yep.
And they hired me. They gave me an assistantship, and so I was teaching a real estate class. And when I graduated, I thought, I'm just going to start doing appraisal. So I did. I just started self-employed doing appraisal.
You didn't become a professor, huh?
Well, I did. I wasn't a professor. I was a lecturer. They hired me on.
Yeah.
Yeah. I was a half-time lecturer.
Yep.
And that was a heck of a deal, Michael, because
good deal.
When you're self-employed, as you know, benefits are expensive.
Yes.
If they exist.
Yes. Brandon. That's totally amazing. I mean, you're talking about the tough times that with the savings and loan crisis, which a lot of people around these days don't even know what that was. And I mean, talk about the devastation that spread across the country.
It was something else.
I mean, it was treacherous.
I can remember doing, because we started coming out of it in 92. And I remember doing an appraisal in Waller County, which is between Washington County and Harris County, where Houston is. And it was for the SBA. And I was doing an appraisal on an industrial property there.
Yeah.
So I go to their appraisal district, and which is our, they're the ones that set the property values for the county and the school districts and the city and everything. And I asked her, I said, could I get a list of all the industrial sales that you've had over the past 3 years? And she said, well, yes, of course. And she goes and gets a blank piece of paper and puts it down in front of me. So I went, okay, well, how about land sales? She went, she flips it over. They were on the other side.
With a blank sheet of paper.
Yeah. So I said, "You've been through this before." She goes, "Oh, yes. There's nothing going on here."
Oh,
So that was how dead it was,
Yeah.
I mean, being that close to Houston and no sales.
Yep.
So yeah, the savings and loan crisis was pretty devastating. But
Oh,
the great thing was teaching at A&M. Even though I was half time, I got full time benefits.
Oh, that's amazing.
Yeah, it was until 9/11, and in 2001 they changed up everything.
Yeah.
And so that's when I quit teaching and started just doing appraisal full time.
Oh, goodness. Wow, that's amazing.
Yeah. And then I did that until, I guess, 2005, and was working one night, midnight. You know how it is. Self-employed and deadlines.
Yep.
And I don't know where I looked, but there was an ad for reviewers for Wells Fargo in Denver.
Oh, okay.
And I thought, I'd like to move to the mountains. And so I applied.
Mm-hmm.
And a couple of days later, I get a call from the manager of the Houston office.
Okay.
For retex at Wells Fargo. And he said, "Are you just interested in Denver, or would you be interested in Houston?" And I went, "Well, what all does it entail?" And you're talking about the teaching. That was what got his attention, because I was a hick, Mike.
I get it.
From Brenham, Texas, just but. And I think that was part of it too, was that Wells Fargo had so many branches in small towns, and all of their reviewers were metropolitan guys.
Oh, okay.
That weren't really savvy in small markets.
Yep.
So I think the combination of the two. So I went to work for them, and it was an incredible experience. It really was. Just all of the property types that came across my desk. It was a great learning experience, and they paid for education, they paid, for designation, and they were the ones that talked me into becoming a USPAP instructor, which led to me to becoming an AI instructor. Yeah. So my time at Wells Fargo was probably, it definitely made a huge difference in my career and my, future. Yeah. So it was, but then again, you're at a bank, right? And
that's true.
Here's what you make. And so go back, and I was an AI instructor. I became an AI instructor really quickly. I think it was in 2008 when I got.
That's great.
Yeah, and that was when the AQB changed the curriculum.
Yes.
Did the whole general curriculum thing, and so I was really fortunate in that. The executive director for the Houston chapter, Lori Wilkins, said, "Look, I know you taught at A&M, and I know you're a USPAP instructor. I need instructors for this new curriculum, because a lot of the existing instructors just weren't going to mess with it.
Oh,
because you had to go get recertified for all this, and a lot of guys just didn't want to deal with it."
Boy, that sounds familiar, Rob. People just didn't want to deal with the change coming.
That's right. That's right.
We think we're going to hear a couple times before we're done.
So I went and got qualified, and she said, if you'll go do this, I promise I'll have you teaching right away. And she did.
Nice.
And I'm very blessed to have gotten quite to be doing an awful lot of teaching, because I find that teaching helps me to keep learning, which that's the great thing about this profession, is that you never know it all.
I couldn't agree with you more. So as they say, if you can't teach it, you probably don't understand it.
That's right. That's the way I look at it.
Mm-hmm.
And teaching, you make a lot of contacts, and because you're in that classroom.
Mm-hmm.
So I went to work for Cushman and Wakefield doing as a production appraiser and quality control reviewer. Started there in 2013, and worked there for about 3.5 years, and then an opportunity to be a chief appraiser at a regional bank came up. And that, after working at Wells, I thought it would be really cool to be a chief appraiser. And so I applied for it, and they hired me. And there was a huge difference, though, because at Wells, Retex had ultimate authority. I mean, it was like, I don't like this appraisal. The value is not there. And unless you can give me a really good reason why the value, you think it's right. I mean, it was just, our word was the law, if you will, there at Wells Fargo. But that was not the case at Prosperity. I was their first chief appraiser, and it was amazing. It was just nothing, I mean, good folks there. They're in it to make money, without a doubt.
Got it.
But it was just not what I had anticipated. So I left there after a couple of years and had a couple of different stops at a few other places. And then in 2021, came back to be the quality control lead for the South Central region here at Cushman & Wakefield.
Oh, wow. That's pretty wild.
So that's my journey there.
Holy cow, that's quite a journey. One of the wonderful things about your experience, as well as, about where you got your start, is it's a wonderful example that there's no defined pathway toward where you're going to go. I mean, as you touched on, whether it was responding to an ad to want to go to Denver. Did you ever make it to Denver?
No, never saw a reason to. I mean, I mean, why?
Yeah, exactly. I get. Well, I mean, because you're outside of Houston, that's why. But and Denver's a little nicer throughout the whole year versus Houston. It gets muggy.
It gets a little muggy. Yeah,
a little muggy. But along those same lines, because of that opportunity, and as I heard you say, the interest and willingness to be flexible for, hey, what's next? Not having to just opened up doors for you that maybe other people wouldn't have had an opportunity for.
Yeah, I don't know. That was a benefit of being raised by the parents I was raised by. They instilled in both my brother and me that, look, you set your own limits.
Yeah.
And if you don't keep pushing ahead, it's not going to happen.
That's a great reminder that it's not, you may be able to wander into one of those bars and get some converts, but other than that, you got to go out and actually get in there and get some things done, because it ain't going to happen.
Get it done. Exactly. So, and it's been great. I mean, the whole thing, I always tell people there's nothing I'd rather be doing other than making records and doing a concert tour. I think I'd still prefer that to real estate appraisal, but I mean, it is an excellent second choice.
Rob, I just have to say that one of the benefits, not being from this part of the country, but living in Chicago, and I live real close to Wrigley Field, which it's the home of the friendly confines of the Chicago Cubs, is they have concerts a couple times a year in their stadium. You got to see the Steve Miller Band here.
Oh, wow.
About a month or so ago. And I mean, Rob, I think they got a spot for you. I mean, I don't think...
Steve Miller, you don't realize how many radio hits that guy had until he does a concert. And then you're like, oh my gosh. Oh, it's phenomenal. Dallas Boy did good. And then it's just, wow. Because he did an Austin City Limits show a few years ago, and I was watching that, and I was just like, God, right. That's right. He did that one. Mm-hmm. Oh, yeah, he did that one. So, yeah, Steve Miller is excellent.
I mean, there's always room for a couple more albums on the wall there, Rob. I mean, it goes to show you.
Oh, yeah, I'm working on it.
Who needs more letters after their name and appraisal when you can hang an album on the wall instead?
Well, I agree with that. We're working on it. Got to get the single out first.
Yeah, got to get the single out. Hey, thank goodness for technology and all these mediums to launch.
Oh, yeah. It's a good and a bad thing. Like the guys that are on Spotify, they don't make squat from Spotify. Mm-hmm. Yeah. I think somebody did a thing that if you took a computer and you set your song on repeat 24 hours a day for a whole year, you'd make something like $2,500.
Oh, are you kidding?
No, I think that was the amount. It wasn't impressive, it was impressive that it was so small.
Yeah, that's
you
true.
know.
That is definitely true. Speaking of small beginnings, at least, because you had that opportunity when you went back and got your degree at A&M, and congratulations, Rob. We have so many firsts on this podcast. You are definitely our first A&M graduate to be here on the podcast. So,
oh my gosh!
kudos to
Well,
you.
there are a lot of them. You need to do more. There are lots of Aggie appraisers out there.
Tons, actually. A couple of them come to mind that you and I know well. But you get to claim the first spot there, Rob. Congratulations.
All right. But you have to remember, I'm not an Aggie. I just got a master's degree there.
I do.
Big difference.
There's the vein runs deep when it starts in undergrad.
Those guys bleed maroon. There must be a clause in that undergraduate contract that you have to spend so much per year on sportswear.
Oh my goodness.
And at least one of your cars has to be maroon.
Yeah.
I think that, it's an amazing thing.
I'd love to be the car dealership near the university. just ship me one of those cars. Ship me on the phone.
Yep.
Oh man. So what did you learn early on, having the opportunity to be an instructor while you were still in the educational environment of Texas A&M?
Well, what I taught in that first class I taught was personal finance.
Oh,
and so it was a kind of a survey class of how to budget. It was a really good class, I thought, and taught you how to apply for a loan, how to budget, just all kind of really good information for folks. And then after I graduated, I went to the department head the semester I was graduating, and I said, showed him my resume, and I said, what would you think if I was coming to you, not as a peer, but as somebody looking for a job, looking at my resume? What would you suggest I do different? And he looked at it and he said, well, reading this, I can only say one thing. How would you like to teach real estate decision making and be a lecturer in the department? Wow. And I was like, well, what all does that entail? And he laid it out for me. He said, I need somebody that knows that's not going to be a pushover. And see, what was happening was the guy that was teaching it at the time was given all A's and B's.
Oh.
And so it was an undergraduate class, so like 60% of the class was on scholastic probation. And the Department of Finance at Texas A&M does not have easy courses. So they were, and that first semester was kind of tough, He said, I'm not even going to read your evaluations for the first semester.
Okay.
So you need to do some culling. And
got it.
So it was a little brutal, A lot of folks kind of didn't like what I was doing, and I was just, okay, well, whatever. But I learned what I learned. You delve into that stuff over and over and over, because I was teaching fall, spring, and one summer semester. Okay. Yeah, so I was in the thick of it. So, and as a result, two things, like I had to retake my broker's exam because I let my CE lapse, and had no problem passing that because I was teaching principles of real estate. And then for the comp, for the state exam, like I said, except for passed that the first time around. So I think dealing with the principles over and over and over is only a good thing. It just is,
It's true.
You can't. One thing I wish the AI would do, our points that we have to get.
Oh yeah.
I wish they would make taking principles, just sitting through it again.
Sure.
Be part of that, because I know a lot of guys just completely. Because I review appraisals. That's all I do is I review them.
Oh, okay.
And I see people I know that are just as intelligent as they can be. They've been appraising forever. They're great appraisers. Yeah. Every now and then, you just see them stray away from the principles.
Mm-hmm.
It's like, well, wait a minute, come back to earth here.
Yeah.
Remember who you're writing this for, type of thing.
Yeah.
but that I think that was it. It's just and then being challenged to learn new concepts. Like the advanced market analysis was particularly challenging for me because having appraised in this market, in this small market, until I went to work for Wells, it was never, it's like if you have the money, okay, build it.
Yeah.
You qualify for the loan, build it. No one was that worried about market demand. And then getting exposed to that was just a whole new world of the absorption, and it was great. But I had to learn it before I could teach it. I had to do it before I could teach it. So, is just the challenge of auditing the class, learning the class, taking the test, doing that to be able to teach keeps you sharp.
Yeah, it's
without a doubt.
I totally agree with you on that one. That and having to for those that choose to take on the responsibility of hiring and developing team members, that comes in a close second.
Most definitely.
Oh, you got all kinds of questions coming at you from every which direction. You're like, I might have to get back to you on that one.
Look that one up. Yeah, right.
Or make a phone call. Phone a friend. You're like, yo, is it me or am I like off base on this? They're like, no, you're not off base. Okay, it's them. No, that's a great experience. And as you mentioned, that has led you through a number of teaching opportunities, and you're still active today, if I'm not mistaken. I know I think your name pop up on a number of training opportunities around the country.
The market right now is tough for appraisal companies. Many companies are having a hard time getting enough work with the same marketing they used to. Is your company struggling, having a hard time getting new customers or getting additional work from existing customers? The answer to this problem is easier than you think. Do more business with the people you already know. Over 10 years, the average U.S. appraisal firm meets over 17,000 potential customers. That's a lot of people you could be doing business with right now. But it's a big problem if you don't have a proven process to communicate with them. StoryLux turns this problem into an opportunity to grow. Our advanced AI marketing tool can rebuild your contact lists and harvest long-forgotten communications. Imagine reaching out to everyone you've ever met with just one click. For the cost of 1 or 2 appraisals a month, StoryLux helps you reconnect and market to people who already know you, like you, trust you, and want to do business with you. Act now by contacting StoryLux today to turn your business growth dreams into reality. Email appraisal@storylux.com. That is appraisal at storylux.com. And now back to part 2 of the episode.
The in-person classes, the COVID screwed all that up. And people are having a hard time getting back to it, which I think is really unfortunate because there's no substitute for it at all. I mean, I'm teaching a synchronous class starting next week, and that's going to be the last one I teach because I'm just tired of talking at a computer. Yeah. It's not why I got into it. Mm-hmm. And even though there are benefits from synchronous, I'm an in-person guy, and I prefer that 100%.
I completely agree with you. I lead teachings and trainings mostly domestically, but some globally. And man, it is hard to lead a training online. I'd much sooner for the same fee make the travel and do it in person. It's just so much more engaging. It's enriching, and the connectivity that exists for the people that are there is so valuable. And there's a bit of a hardship. Don't get me wrong, but the reward is so great. Not for me necessarily, for them.
Well, I still trade data with folks that I took classes with back in the 90s.
Oh, wow.
Still in touch with those guys. Most of my career moves have been from in-person educational opportunity. And here in Texas, we're a non-disclosure state. So if you don't have a network, you can't do this job. Mm-hmm. You can't.
And Rob, for those people, like say above the Mason-Dixon line, that have no idea what you're talking about, You want to comment on what it means to be how do you perform appraisal in a non-disclosure state? What are the implications?
Well, non-disclosure, of course, means that the sale price is private. It's not listed on the deed. Yep. It's not listed anywhere. You can't get settlement statements because of Graham-Leach-Bliley and that act, So you get sale prices from having a network.
Yeah.
And usually it's going to be other appraisers. We all have our brokerage networks that help, but brokers aren't always as forthcoming as your fellow appraisers, So if you don't have a network where you can call someone and say, hey, I need some sales for example, years ago when I was doing production at Cushman, I had to do a freestanding emergency room down in Corpus. And it was a really immature market. So I went down to Corpus Christi, which is in South Texas, for those of you that don't know. And I thought, well, this will be local. But no, it was the first one in Corpus Christi.
Ooh.
So then I thought, well, let me look at South Texas. Well, there was one other one in South Texas. So I went statewide, contacted my four sources for medical.
Okay.
Said, you guys got any rents or sales? Because I'm coming up with nothing.
Yeah.
And so they all were, because we trade information.
Oh, yeah, of course.
We're not breaching confidentiality, of course, but but what's interesting in a non-disclosure state, from my four sources, there was one sale that was common to all four.
Oh, okay.
Just one.
Just one.
And after looking at it, that one sale from those four sources, I had 3 different sale prices.
Oh, fascinating.
Yes. Yeah, very close. They were all very close. But, excuse me, but there were 3 different sale prices and 2 different confirmation sources. So I called both those confirmation sources, and after talking to both of them, I had my 4th sale price.
Oh, yes. My goodness. People don't understand how much fun this is.
Oh, yeah. So I just wound up averaging them and putting it in the comments as to what I'd done.
Oh man, well, hey, it's like, hey, we got a range. Yeah, one of them,
We got a range.
We're in there, feeling confident.
So that's life in a non-disclosure state.
Oh wow, that is just a joy that I just don't get to deal with very often, Rob. So I feel like I'm missing out.
Yeah, I know. And you guys charge as much per report as we do. That's what amazes me.
Yeah, we don't. And Rob, we don't charge enough.
Well, no.
If I had one, what do they call it? Banny rooster. As family grew up in farming and stuff. If I had one pulpit I could stand on all the time, and that is, people, you are extremely talented. You are extremely professional, and your fees do not reflect it.
Yeah.
Go hire a plumber, and you're going to find out how much more valuable that plumber is than you are. I'm like,
exactly.
Fees, people, just across the board. Do not blink. Do not pass go. Do not collect $200. Just raise it up and keep going. So,
yeah, I don't see it happening though.
Nah, me neither. But it's nice to pontificate.
Yes, it is.
So what was it like when you got to? I mean, you had that unique opportunity, as you touched on early on, where you not only took the loan file, you went out and appraised the property. I mean, you guys, they say you got to sit in a couple chairs around the table as opposed to just being in one particular role.
Well, it was the experience I had as a loan officer worked out really well because, I could see what the deal was, could see the property, and would be able to call the loan officer, and tell them, go over what's good and what's bad, what's going to work and what's not going to work. And plus, having been a client, when I would always make sure, and it's something I always stress in class and to the guys that I train, your clients don't like unexpected surprises, be they positive or negative. If something is really, really good, let them know. If something is really, really bad, let them know. It's just, that's the last thing you want to see as a client is an unpleasant surprise on a property at the last minute. And
yeah, that's true.
That's our life, isn't it? I mean, appraisers live in the last minute, without a doubt.
We literally had one the day rum. I kid you not. Client reached out. There's a deadline tomorrow. You mentioned Harris County. Harris County is real big on property tax appeal. And client reached out. And they're like, hey, our owner just got back to us. They're interested in having you all do this. Can you get done tomorrow? I'm like, what the? I'm like, I quoted you like weeks ago.
Yeah.
A reasonable lead time. And you're asking for us to do it in a day? I'm like, I appreciate that they even asked. But at the same time, I'm like, if you even asked, I'm like, my goodness.
People have no idea what we do and how long it takes. They really don't.
Can't you just shake that little magic 8 ball and out pops the answer?
That's it.
So when you had that opportunity to first step in the role as a chief appraiser, how did your view of the activity and the profession transform, or how was it impacted?
Well, one interesting thing was that nobody in the bank knew that you were supposed to be getting as is values on all of your properties. As is, the guidelines state that there should be a value in its current state.
Yes.
So, and it was disappointing because the appraisers are supposed to know that. Part of competency is knowing the regulations and the laws that govern what you're doing.
Yeah.
And when I'd call these guys and say, why didn't you include an as-is value? And it'd be like, well, and this was, on stuff coming in when I was first there.
Yes.
Well, you didn't ask for it.
Oh, wow.
And that was disappointing. It's like, well, wait a minute. You're supposed to provide it regardless. So that was an interesting thing. One thing I found out is that most loan officers, and I'm not saying all, but most loan officers are woefully underinformed about FIREA, about the 2010 guidelines, about USPAP, about everything that governs us, which blows me away, because if you're a real estate lender and your loan is dependent upon the appraised value, I would think that you would want to know more about it, But I don't see that. Most of them, what they're interested in is getting the loan closed, whatever it takes. So
that's how they get paid. They don't get paid to conform to FIREA. They get paid.
No, they don't. They don't. And it was a constant. It's always a constant battle between this is what you've got to do and this is what we're doing, type of thing. I mean, there was some interesting. I don't want to go into a whole lot, but it was a challenge to set everything up, to get good reviewers, to get policies and procedures in place that everyone could live with. One thing to their credit there at Prosperity was, prior the loan officers would have to approve every fee for every appraisal. And at Wells, we could engage if it was under a certain amount, like any fee under $3,000 you could engage or something to that effect.
Yeah.
And because these guys want them in fast. And so by having to approve every appraisal bid, then you're adding 2 to 3 days to the process. And so to their credit, when I explained to them, look, if you let us engage these folks, you set an amount. I'm saying, for fees under $3,500, we can engage without approval.
Yes.
Then this is going to speed up your process. And they were like, wow, that makes perfect sense. So they went for it.
Yeah. Yeah, that's a good way to go about speeding things up.
Oh yeah.
Yeah, that's definitely a good way to go. Definitely like that one a lot. And then, given that you had one of the things you touched on is both when you were in a production capacity as well as in some other roles is sometimes in order to earn the compensation that you were worthy of, you had to move instead of stay. How's that process worked out for you? Because that's something people are not as familiar with that need to maybe move around a little bit more.
It works. It's good and bad. You don't want to get a reputation of being someone that's flaky, and not, the old saying, the grass isn't always greener. That is true as well.
Sure.
What I've learned is before you make a jump, before you make a move, you find out everything you can, because it isn't always as good as it seems to be. The move from Wells to Cushman was great. I mean, it was because all of a sudden, there was a whole lot more money.
Yeah.
Of course, there was a whole lot more work, but there was a whole lot more money. The move to being chief appraiser was good in that it said, okay, this is not something you want to do.
Got it.
And then the two moves I made after that, neither one of them worked out that well. But it was, they served a purpose. So, and then coming back to Cushman and Wakefield, I made a lot of, it took my time before I made the decision to come back. But it's definitely panned out very well. Like, it's one of the few times in my life I can say I actually made the right decision.
Yeah, that's good to hear. I mean, I maybe, who knows, one more year, 300 nights on the road, that might have been the right decision too. We'd be going to your concerts at this point right now, 51 years later. Instead of something.
We thought if we were traveled that much, we'd increase our chances of being at the right place at the right time.
Hey, something to be said about that. That sense of timing and place is a big one. That is definitely big. Love that kind of stuff. What observation have you gained having been an instructor for as long as you have, in terms of supporting people that could be your future students, and either in terms of like, hey, here's some trends that I've observed that have really served students well, or here's some challenging things I'm seeing that actually don't serve people well and they don't get the return on their invested time and education?
It's hard to say. The one thing that I recommend, and tell me if I'm not answering the question right here, but they have an elective. Folks getting a general certification have an elective they can take. They've got it laid out, and then you can choose whatever. And most folks go with advanced income, which I think it's going to depend upon what you're specializing in, what kind of if you're going to be a generalist or what you're going to be. But I've always thought, since they came out with the course, that because advanced income is really just a composite of income 1 and 2 with a couple of extra things thrown in.
It is. I took it.
So,
yeah. I mean, it's some cool, complex stuff that I will never do.
Yeah. And so my thought is you've got that elective. Yeah, never say never. If you're an appraiser, you're going to be dealing with reviewers.
Yeah.
Everything you write is going to go through review.
Yes.
So to me, review theory is the best elective to take. And that's what I always recommend. Take review theory because you're going to be learning the mindset of the reviewer.
Yes.
And that's such a valuable thing. It's like me doing QC, quality control. I always tell the guys, look, what we're trying to do here is answer the question before it's asked.
Yes. That's a great one.
And I think that course is just, to me, it's the best course the Institute offers.
Having taken, that was the one benefit prior to COVID, seemed like most courses premiered in Chicago. And for a good number of years, I took every premiere that came through just because I was like, I don't know what I don't know. And I have to agree, that was very good. And I think you're suggesting that as an elective on the education path forward. Like I said, get in the mind of somebody else, as you say it.
Oh, yeah. I mean, I've taught it several times, and it's always, to me, it's just always amazing, especially like when I taught it in Chicago one time. Mm-hmm. I had the whole review staff from Chase in that class.
Oh, wow.
And then also a bunch of fee appraisers.
Mm-hmm.
And the interaction between those two was invaluable. I mean, it was just a really, really cool concept.
I think that's to support that, and why I'm a huge fan of going to the premiere, because you get people at the premiere that are not going to attend otherwise, or early on in the course. And in that in-person conversation, when quantitative analysis rolled out, and I'm sitting in there with like Marv, and I mean, like these, I was like, I don't deserve to be in this room. I'm like, I did, of course, I'd earned my way into the room, but I just like, I'm just a fly on the wall amongst these like PhDs, really smart types. And I was like, these are fascinating conversations that had no use. I had no use of them at that point in time, but they instilled in me that sense of, asking the right questions to be able to solve the right kind of situations to serve clients. Right. Like, that's really useful. I'm just not going to get from reading a textbook.
No, you're not. You're just not.
Yeah.
And like you said, the interaction that you have during breaks, during lunch, during whatever time with the other folks in the class is just amazing.
That is a good one. Well, I mean, Rob, given the longevity you've had in and around the profession after you retired from being a rock star, is there anything in particular you're excited or eager for over the next 3 to 5 years?
Yeah, I'm enjoying watching the profession get more diverse. Seeing more. I've tried for a couple of years to teach an appraisal course at Prairie View A&M, and never could get never got any traction on it. Yes. Because I've always thought that it's just too just too many of the same type of people doing this profession. Mm-hmm. But it's encouraging to see. I'm not a fan of DEI. You can't have equal outcomes, but I think equal opportunity is a wonderful thing. And I'm glad to see more people getting involved in our profession. Like seeing the legacies, Michael, that is so cool to have someone in your class whose father was an appraiser, whose grandfather was an appraiser. They're coming in third generation. Yeah. To me, that's just awesome.
Those people have, if there's been conversations, as they say, around the dinner table, if they grew up with conversations around the meal table, there's just a whole different planting of seeds for perspective from such a point of view. I mean, I grew up with a family that was around farming, and dinner table is where you caught up on all the news of the day and the updates and everything else. And I learned more from all the sentence sayings and kind of papa preaching, if you will. I was fortunate enough to, have a family that was together for a lot of years. And, I don't know what it would have been like to grow up in a different environment, because I didn't get to live that life. But as you said, my dad was generational, except for his mom, who said, "You're not allowed to be a farmer because you're my oldest boy, and I want one of my kids to have to go to school beyond grade school and stuff." So it's just a different trajectory. But otherwise, I mean, I get together with my cousins, and like you said, just talking about being from, you made your reference earlier, like, I'm just a hick from, out in the sticks. And it's like, what? That's most of my family, actually. And with them, and it's so refreshing and amazing. Like, how do you know that? Like, what do you mean? Like, I've always done that. I grew up with it. My dad taught me that. Oh, that's my uncle. Yeah. And like, grandpa taught him that. And I'm like, oh yeah, I remember grandpa. I mean, it's just amazing when that comes together. And, hopefully so many more of those new legacies are being built these days.
Right.
Oh, that's fantastic. Well, Rob, man, we always appreciate the opportunity to hear from people that have as much experience and exposure as you do. And it's such a wonderful opportunity, not just for me, but for everybody listening, just to gain some perspective on what's possible out there. And like I said, even if you just stay on the outskirts of Houston, you can still see a lot of the country.
I mean, I'm in Brenham. I have to drive an hour and a half to any airport I go to. So,
oh goodness, I love it.
I can't Uber; it's too expensive. So,
no. Tell Christian you need another raise. You need an Uber account or something.
Yeah. Well,
yeah,
that ain't gonna happen.
Yeah, it's not gonna happen. Well, friends, thank you so much for joining us for another just fun and insightful episode of Perusing's Appraisers on Purpose podcast. And Rob, thank you for joining us.
Thank you for having me. It was a pleasure.
Yeah, it's a pleasure. Well, friends, make sure to share this out. It's how we continue to grow. Every season, the numbers grow by between 25 and 50%. It's all just because of your generosity and your thoughtfulness, because of the contributions of our peers like Rob. So, Rob, again, thank you. And until our next episode.
Adios.
Adios.
Thanks for listening to this week's episode of Perusing's Appraisers on Purpose. We hope you enjoyed learning from the amazing professional paths and achievements of our beloved guests. Before we go, please subscribe on your listening channel, Spotify, LinkedIn, YouTube, and other podcast channels to hear more from appraisers and valuers regarding their life and their work. After you drop a comment below, who is one friend and peer you can generously share this episode with? If you have any suggestions or questions for future episodes, we'd love to hear from you. Just send us a message on LinkedIn and we'll be sure to get back to you. Thanks again for listening, and until we're together again for the next session of Perusing's Appraisers on Purpose, create the change that you seek.